Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Nouveau Monde Graphite.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis.
Okay, so, there's this massive push for EVs, for energy storage, and that's putting a huge spotlight on critical minerals.
Right, but the real race right now isn't just finding the minerals.
No.
It's about building out the whole North American supply chain, to meet all this new demand from regulations and industry.
And that's where a company like Nouveau Monde Graphite comes in. They're sitting right in the middle of this whole transition.
It's a fascinating case because you're looking at a company that doesn't really have traditional revenue to look back on.
Not yet, anyway.
Exactly. It carries this immense strategic value instead.
Yeah.
You just can't analyze it like a mature company.
So you have to look past the current losses.
You have to. It's all about their project pipeline, their ability to execute, and their competitive edge in this, green battery space.
So let's start with that reality, the books. This is a developer through and through.
Yeah, the Q3 2025 financials, they basically confirm that. They showed continued net losses. EPS was around -6 cents.
Which just reflects where they are. They're pouring money into building the mine and the processing plants before they can flip the revenue switch.
And that wasn't a surprise. I mean, that EPS number, it met the consensus estimate, so it's not a red flag. It's just a checkpoint.
A sign that they're on plan.
Right. And if you connect this to the bigger picture, all the analysts are looking years down the road. They're looking at this incredible revenue ramp.
And that's the real story here.
That's the whole story. The first real significant revenues are projected for, late 2025 into 2026?
Yeah, but the long-term forecast is it's huge. They're talking about reaching over $500 million in annual revenue by 2031.
A staggering number. It shows you the kind of belief there is, not just in the market, but in their ability to capture a big piece of it.
But that kind of growth needs a ton of upfront cash, which brings us to their balance sheet strategy.
They're funding their big project, the Matawinie project, mostly through equity and partnerships.
So they're avoiding big debt payments in the near term.
Exactly, and that's key. That's usually the Achilles heel for miners at this stage. They're choosing equity financing instead.
Okay, but let's push back on that. Doesn't relying so much on equity just punish the early investors? I mean, you're looking at potentially massive dilution as they issue more shares.
That's a crucial point, and yes, dilution is absolutely a risk, no question.
So how do you weigh that against the financing risk?
Well, I think what management is signaling is that they're prioritizing project failure risk over shareholder dilution risk right now.
Meaning it's better to have a smaller piece of a successful project than a bigger piece of nothing.
Precisely. A project failure, because you can't get debt financing, is catastrophic. Dilution is painful short-term, but it ensures the project actually gets built.
And gives them a shot at hitting that 2031 revenue target.
Right. The fact that they have no dividend, no buybacks, it shows every single dollar is going straight back into development. And for a high-growth developer, that's exactly what you want to see.
So let's get into their competitive advantage, because this is where it gets really interesting.
Yeah, it's not just a mining company.
No. They're trying to be this pure play, vertically integrated source for natural graphite, built specifically for the North American battery supply chain.
And we should probably break down what vertical integration actually means for graphite, because it's pretty complex.
Yeah,
For them, it means they control the whole chain, from digging the rock out of the ground at their mine.
Matawinie.
At Matawinie, right?
Yeah.
Then they do the primary concentration, and then this is the crucial part. They transform it into what's called spherical purified graphite, SPG.
Right. And that's the final high-value product that actually goes into the EV battery anode.
Correct. The natural graphite flake has to be purified to an incredibly high level. Think 99.95% carbon. And then it's shaped into these tiny spheres.
And that process is normally very energy-intensive and not very clean.
And capital-intensive. By controlling all of that in Quebec, they use the province's cheap, abundant hydroelectric power.
So their real moat isn't just location, it's this green aspect.
It buys them two huge advantages. First, regulatory certainty.
The Inflation Reduction Act.
The IRA, exactly. Their local sourcing and processing means the batteries made with their graphite are eligible for massive government subsidies. That is a measurable, direct, competitive benefit.
It makes them more of a partner than just a supplier.
Absolutely. And second, the ESG angle, the green certification. It reduces counterparty risk. I mean, look at the geopolitics. Most of this stuff comes from China right now.
And automakers are desperate to find other sources.
Desperate to secure guaranteed, traceable, non-geopolitically sensitive supply lines. Nouveau Monde provides that guarantee. They can likely command a premium because they are selling stability.
Stability and compliance, not just the mineral itself.
That's the so what's. They are positioned to be the first big North American entry point for this whole sector.
Okay, so how is the market reacting to this story?
Well, if you look at the chart over the last 3 months, the stock's shown some really positive technical momentum.
Right, it moved from a low around what, $1.22 up to where it is now, around 274.
Yeah, and it's a classic series of higher lows and higher highs. It signals accumulation.
And the volume confirms.
The volume is key here. You're right. You see these sustained periods of above-average trading volume on the upswings. That tells you it's not just retail speculation.
Institutions are getting in.
Institutions are building positions ahead of these catalysts everyone is waiting for. And technically, it's trading above its 50-day and 200-day moving averages, the definition of a healthy uptrend.
And it still seems to have room to run, right? It's not totally overheated.
That's right. The RSI is still below 65. It suggests the upward move has been, pretty healthy and orderly, not some crazy parabolic spike.
Now, analyst targets are backing this up. We're seeing a consensus range of 350 to maybe 425 over the next year.
But there's one that really stands out.
H.C. Wainwright. They raised their target way up to 750 back in October.
Which is fascinating. Why so far outside the consensus?
What are they seeing that others aren't?
I think what that higher target implies is that they're pricing in optimal execution.
Of the whole long-term plan.
The whole thing. Not just the mine, but the full ramp-up of the purification facility. They're betting on the company becoming a true anchor in the North American battery supply chain, not just another miner.
And you can't ignore the buzz around it. The forums are, full of rumors about new offtake agreements with top-tier EV makers.
That speculation is a direct reflection of the strategic value we were just talking about. When you have guaranteed IRA eligibility, you become a strategic asset.
And then there's the M&A chatter.
Of course. Larger mining companies or even battery makers looking to buy their way into North American graphite.
So these rumors, even if they're unconfirmed, they highlight that a big partnership or even a buyout could be a major trigger. The market is clearly anticipating big news.
Okay, so we've established the potential. Let's talk about the immediate triggers. What should people be watching for in the very near future?
The big one, the Q4 2025 earnings and the operational update. That's expected in February 2026.
And that's the moment the whole narrative could flip.
Right. Management has been guiding towards initial revenue recognition and their first commercial shipments right around that time.
That date is the inflection point.
Yeah.
That's when the focus shifts from spending money to making money, from CapEx to cash flow.
It's a huge psychological hurdle for the market. What else? Are there other short-term drivers?
For sure. Any news on, say, final environmental permits for the construction?
Yeah.
Or confirmation of a new big offtake agreement. Any of that would move the needle.
And just the broader industry news too, right? More support from the U.S. or Canada for critical minerals.
Yeah, those are sector-wide tailwinds that just reinforce the whole story.
And looking further out, what justifies that huge $500 million revenue projection?
That's the Phase 2 expansion, a dramatic increase in capacity. And with that, the really big long-term contracts from the major automakers.
So successfully ramping up Phase 1 is the major re-rating event.
It completely changes the story. It shifts the market's focus from execution risk to actual revenue and margins. Once they prove they can ship on time and at quality, their strategic value just multiplies.
But we have to play devil's advocate here. It's still a high-risk situation.
Oh, absolutely. It's a pre-revenue mining project.
So what is the #1 risk factor people need to keep in their minds?
It's simple. Project execution delays.
Can they build it on time?
That's it. Building these complex facilities is incredibly hard. If that February 2026 milestone gets missed, if the first revenue is delayed by even a quarter or two, the market will punish the stock severely.
And they're still reliant on raising capital.
Which leaves them vulnerable if investor sentiment shifts. So if graphite prices weaken and they miss a milestone, that's the double whammy on the downside.
But the demand side seems pretty solid.
The demand visibility is very high, and the regulatory support provides a really strong structural buffer. It's all about converting that potential into operational reality. The risk is in that gap between the promise and the delivery.
So to sum it all up, you have this strategically vital ESG-aligned company, and it's standing right at the inflection point of generating commercial revenue.
And it's backed by strong technicals and growing confidence from analysts who see this story really playing out over the next few quarters.
The bet is purely on management's ability to execute a very complex project on schedule.
The investment horizon seems attractive for both short-term traders, playing those upcoming catalysts, and for long-term investors, capitalizing on this huge geopolitical need for a North American graphite supplier. The key challenge isn't demand, it's execution. If they hit that February 2026 milestone, the whole story changes.
Thank you for joining us on this look into Nouveau Monde graphite. We hope this knowledge helps you navigate this complex, high-potential sector.